Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024. Good evening. Welcome to the program. I'm Stephen Grootes. Breaking news as we go to air tonight. You heard in the EWN bulletin, Mbali Nhlapo gone as Higher Education Minister. This is one of those presidency statements that you need to decode. You don't see the word fired. You don't see the word sacked. You don't even see relieved of her duties. All you see is the president, in terms of appointing Buti Manamela, the Minister of Higher Education and Training. He was, of course, the Deputy Minister, has been the Deputy Minister there for many, many years. And then a new paragraph appointing Dr. Namusa Dube-Ncube, the Deputy Minister of Higher Education and Training. No mention of what's happened to Mbali Nhlapo. But the context of this is absolutely everything. Two things were due to happen in really the next 48 hours. In my view, one was more important than the other. But the first, chronologically, was that she was due to appear in Parliament tomorrow. She's been accused of lying to Parliament. The second was that on Wednesday, I think it was, she was due to be the subject of a vote in Parliament, in the National Assembly, about whether or not the Democratic Alliance would support the vote for her budget, the budget for the Department of Higher Education. The DA had said that they would vote against it. As I understand the technicalities on this, if they had voted against it, that would mean that the entire budget falls away. Now, you can just imagine the politics of all of this. The president surely did not want to be seen to be giving in to the DA. The DA would say to its constituency, we can't in good conscience vote for a person who we believe to be corrupt and has lied to Parliament. And the ANC would probably say, well, the DA are the people who are imperiling, putting in danger the entire budget. And I'm probably way oversimplifying it when I put it in those terms. Now, that particular stumbling block has gone. It may not be the only one, but I would imagine now probably gets a lot tougher for the DA to say to anyone, we're not voting in favor of the budget. That's where they might just look as if they're not on quite the same strength of ground. Well, I'll be very interested in your view on this evening. I mean, maybe the former minister is going to say that she resigned. Maybe she found her conscience, or maybe she did nothing wrong, but just decided for the good of the party, or was asked, or something. Who knows? Maybe there's another explanation, but for the moment, it would seem that she was asked to go, and she's gone. I can't see any other way of seeing it at the moment. There will, of course, be lots of conversation around all of this, but the real risk was that one vote by the DA against the budget could sink the entire budget, and who knows what would happen after that. That's when things would start to get very, very difficult. Well, we'll get some analysis on this breaking news for you on The Money Show this evening. We'll talk about the situation at Fly Safair. We're due to speak to the CEO at Prime Kapital as well, Martin Slabbert, not the person who's been reading news for you, another Martin Slabbert tonight, about the MAS issue. And it's a fascinating issue. Also, of course, this evening, how to make money out of mess. Looking forward to that conversation from 7:30. Mbali Nhlapo, the housekeeping and cleaning influencer. If you ever had stains that you're battling to get out of, well, that is the person to speak to. You'll hear from her from 7:30. Good to hear from you this evening. You might well have a view on what's happened to the former Higher Education Minister on 011 883 0702 021 446 0567 and voice notes tonight on 072 702 1702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, I don't know if your day has yet been affected by the Fly Safair strike. Maybe someone you know was traveling, maybe a meeting was cancelled, maybe you drove a long distance to be at a meeting that was cancelled. So flights already cancelled. 200 of Fly Safair's 300 pilots seem to have joined the pilot strike. The union that represents the pilots, Solidarity, they say they'll be on strike for 2 weeks. There's a dispute about wages. We've had plenty of those. but there's also a dispute about the roster system that Fly Sapphire is using. Guy Leach is the editor at SA Flyer magazine, expert who commentates on all of this. Guy, good evening. Strikes like this are quite rare in our environment. Can Fly Sapphire really survive a strike like this for much longer?
Yeah, hi, Stephen. Well, that's a very interesting question because I suspect that they've already made a decision as to how much they're prepared to spend on the strike, as it were, how much it's going to cost them. Factored it into the long-term benefits of trying to keep pilot salaries and benefits low, and set a target. And they've already indicated that they're quite prepared to play it out. They were the ones who created the 7-day lockout at management. It was probably a slightly spiteful response for Solidarity to go for them a 14-day strike. But I think that this thing's going to protract. The real issue is, can they really keep the schedule together for longer than 7 days?
I mean, that's surely when things start to fall apart. And, Guy, I can understand the argument about salaries. Both sides will make important points. What I don't get is the argument about rosters. Pilots say they're not getting enough time at home. That's a big problem in this industry. Fly Sapphire say they use the same rostering system as other airlines. What's the real problem here?
Yeah, it's quite nuanced, this argument. The point was that they had a simple roster system, a fixed roster system, when they were a smaller airline, and then they grew very rapidly post-COVID, and the roster system just clearly wasn't keeping up, so they purchased a proprietary off-the-shelf system. The accusation that I've heard is that they purchased the B model of this version, and if it's going to work, it's got to have very rigid rules, which they haven't yet negotiated or got in place. So if there's too much flexibility for an open system, then there's crises at the last minute, and pilots feel that they've been properly messed around. In other words, they'd booked time off for a holiday months in advance, and then all of a sudden they've been called out. So there's obviously a lot of dissatisfaction, a lot of ill feeling about that.
And then the salaries argument. Our pilots can work in other countries for dollar salaries. They may not want to. They might prefer it here. I presume they do. Are there other benefits pilots get here to compensate? I mean, I can't imagine Fly Sapphire being able to sort of, compete with a dollar salary in any way.
It can't. I mean, South African salaries have been significantly falling behind the world average. And the reality, too, is that internationally there's a massive worldwide pilot shortage. So the Far Eastern countries, particularly the China airlines, are offering as much as 4 times more in terms of package, and most of it is tax-free. That's extremely hard to compete against. So all the airlines can do is hope that the lifestyle benefits and the fact that many pilots have children at schools and mortgages and so on is going to keep them there. But it's an ongoing problem. Fly Sapphire is losing at least probably 5 to 10% of its workforce every year, not just to retirement, but obviously to international poaching.
Guy Leach, thanks very much indeed. See the editor at Fly Sapphire.
702. Stephen is on X.
At Stephen Grootes.
SA Flyer magazine, not Fly Sapphire. Fly Sapphire, of course, is the airline. Well, let's continue, shall we? A war of words breaking out today between Hyprop Investments and Prime Kapital. They both want to take over control of MAS Real Estate. MAS Real Estate controls shopping malls in Eastern Europe. On Friday, Hyprop announced an open offer to shareholders. Prime Kapital owns a 60% stake in those developments, in Prime Kapital Developments. Prime Kapital Developments owns 40% of MAS. In other words, Prime Kapital is a big part of the owner share or the share ownership of MAS. Meanwhile, other shareholders who own around 15% of MAS say they want changes to the board. They believe 2 of the current directors are not properly independent. They seem to be backed by the Public Investment Corporation, which owns 14% of MAS. Martin Slabbert is the CEO at Prime Kapital. Martin, good evening. You've slammed this offer from Hyprop. It does give current MAS shareholders certain options. Why? What do you believe is wrong with this offer?
Good evening. Can you hear me?
Yes, we can. Martin Slabbert, thank you for your time. You've slammed the offer from Hyprop. What do you believe is wrong with it?
Well, we don't like fighting with people, but unfortunately the situation is such that we had to reach out to smaller shareholders, which are difficult to reach, and consequently we decided to do some media interviews, which is not something you usually do. There are basically 2 issues with Hyprop's offer. The first is that it is not really an offer in the ordinary sense. It is an option disguised as an offer. And I'll unpack that first. And then the second is that there's a bit of or smoke and mirrors around the pricing. And we think it's important for shareholders to understand this. as the offer document is complex and you have to be a lawyer really to follow what's being offered to shareholders. So let me get to the first point, which is that the offer is really a request from shareholders to grant Hyprop with options as opposed to making an offer to acquire their shares. The reason for this is the following. The usual market practice with making offers are that the offers will remain open for acceptance after they become unconditional. It's not unusual to make an offer with conditions attached, but it's very unusual to make an offer that's open only for 5 days, as is the case here, saying to shareholders that you have to accept our offer by Friday this week. But by Friday this week, our offer will remain conditional, and many of those conditions are in our control, and we can't tell you by when we're fulfilling those conditions might not be fulfilled. The consequence, which is that once you accept our offer, you give us the right, but not the obligation to acquire your shares someday in the future. It may be in 1 month, it may be in 3 months, it may be in 4 months, it may not be at all. As a result, if a shareholder accepts such an offer, they will not be able to trade their shares in the market unless Hyprop releases them from the commitment they made, nor will they be able to accept anybody else's offer. This is in contravention. Not only is it not market practice, it's also in contravention with the JSE's rules, and we think it also doesn't meet the requirements under MAS's Articles of Association. The JSE has a rule that's applicable to all companies which have their primary listing in South Africa for offers that are made for takeover purposes to remain open for 12 days after they became unconditional. So this is the first issue, and this is why we're saying it really isn't not an offer, but a disguised option contract.
Just on that, Martin, very quickly, you say it breaks JSE regulations. As I understand it, MAS is registered in Malta. The primary listing is on the JSE. So JSE regulations will apply both to Hyprop and, I presume, to anyone else trading in the shares, which would include you, which would include Prime Kapital.
Correct.
Okay. Then the other issue, and we don't want to get too bogged down in technicalities. I understand that they're important. But we've seen some of the other shareholders, 91, Momentum, others, I think the PIC too, they seem to believe that two of the directors of MAS, as they sort of describe it, are too close to you, Micahel Vasilescu and Dan Pascario. Are these two people working for you or supporting you in some way? Are they really independent directors of MAS?
Yes, Stephen, thank you. So first, it's important to understand that we're not the controlling shareholder of MAS. We are a minority shareholder like any of the other shareholders. So we don't appoint directors to MAS. The directors of MAS are appointed by the board, and those appointments are approved by shareholders in annual meetings. And they regularly come up for re-election. So I think that's the first point that I think is important to make. The second, Micahel Vasilescu is not independent. He's one of the shareholders and a partner in Prime Kapital. That's well known. It's not unusual for a shareholder with a large shareholding to have a director on the board. But that doesn't mean that Micahel participates in decision-making around the DJV or around Prime Kapital. MAS's board of directors would exclude Micahel from any decision-making when it comes to Prime Kapital, the DJV. So I don't think there's an issue there. Dan Pascario has no relation with Prime Kapital. He's not employed by us. He doesn't work for us. We don't move in the same social circles. He has no investment interest in Prime Kapital. So the only link possibly that one could think about when it comes to Dan Pascario and me is that Dan used to be the chairman of NEPI many, many years ago, and I used to be the CEO of NEPI many, many years ago. But other than that, I haven't known Dan in any other capacity as far as that's concerned. So Dan is an independent director of MAS. And the majority of MAS's directors are independent from Prime Kapital, and so we don't interfere, and we don't have the ability, in fact, to interfere in the decision-making of MAS as far as the DGB.
But then why are some of the minority shareholders, and these are people who are experienced in the market? I mean, this is 91 in Momentum, this is the PIC. They want an extraordinary general meeting to remove them, to appoint other people. They clearly have a very different view to you.
They have a different view. I think it's also important to bear in mind that the shareholders that you've mentioned, including the PIC, all hold more shares in Hyprop than what they hold in MAS. In other words, they are overweight Hyprop and underweight MAS, which means that if there's a transaction pushed through whereby Hyprop acquires MAS at an exchange rate which is unfavorable to MAS's shareholders in general, the only parties that could possibly benefit from such a thing would be shareholders that have a greater weighting to Hyprop than what they have to MAS. And the concerning thing is that these shareholders seem to be supporting and working with Hyprop possibly to do a transaction that favors Hyprop and that would also favor them because of the net shareholdings they have in two companies, at the cost of all the other shareholders in MAS, which include ourselves and all the other minority shareholders, roughly 70% of the shareholders. And that is the concerning thing. Now, it's all good and well if shareholders want to sell their shares at 18 rands a share, which is what Hyprop is effectively proposing with its share swap, for them to have the right to do so. But we don't think it is appropriate to dress up an offer document an option document as an offer document. We think that's the inappropriate part, and we would expect that the JSE should insist that this offer should remain open after it became unconditional, which would be the case for any other offer launched for the company, including if we should launch an offer.
Okay. The question really boils down to this. Why is it better for shareholders? Why do they get more value from basically sticking with the current situation rather than selling? Rather than taking this offer?
The current share price is 23.50 rand, and the price that Hyprop is offering, again, there's smoke and mirrors, is 18 rands a share. Hyprop is saying it's offering 24 rands a share in cash or shares in Hyprop. But if you analyze the situation a bit closer, you would soon realize that the cash portion of the offer is so small that if all shareholders accept their offer, shareholders will only receive 5% of the proceeds of the sale in the form of cash. In other words, if you hold 100 MAS shares and everybody accepts, and you decide to sell your shares to Hyprop, or grant them the option rather, and Hyprop may then later decide to acquire, they'll acquire only 5% of the shares for cash. The rest of it you'll receive in the form of Hyprop shares, and if you look at the exchange ratio, that implies a value of 18 rand per MAS share. That is far below the trading price today. It's far below the offer price that we indicated, which is 29 rand in cash and 31 rand in equity. And it is also far below the net asset value per share. So, it's just a very, very poor value prospect. And I think that if you're going to grant an option to another party, then the option price is below the market price, then the other party should pay you an option premium for you to grant that option.
Martin Slabbert, thank you. CEO at Prime Kapital on The Money Show this evening. Well, you've heard the argument from him. There are other arguments in the market, as you know. Someone who's been following this for quite some time is the financial journalist with Business Day, Micahel Avery. He's been looking at it. Michael, good evening. What's really going on here? It is one of those slightly complex transactions.
Evening, Stephen. Yeah, and one is at risk of getting bogged down in corporate finance legalese if you go into too much of the weeds. I think effectively, and listening to what Martin Slabbert was arguing around the valuation, I mean, that's for shareholders ultimately to decide. I think more alarmingly has been the lack of disclosure. And one needs to go back in time here, just quickly, if you'll allow me, Stephen, to break it down. Martin Slabbert moved to Romania back in the late 2000s when he co-founded Nepi Rockcastle along with South Africa's Resilient Group, and they became one of the largest mall owners in Central and Eastern Europe. He then left Nepi to found Prime Kapital in 2016-17, along with Victor Semyonov, and they then partner with MAS via this development joint venture, this DJV, which is effectively to co-develop property assets in Central and Eastern Europe. And PKI and MAS sign agreements that allow MAS to provide significant funding to the DJV, while PKI retains control over development operations. And over time, MAS continues to provide capital to the DJV, but shareholders begin questioning the lack of visible returns. We also see PKI starting to accumulate a strategic stake in MAS, and it's partly using the capital the capital that's flowing from the DJV to do this. And that's really now in the early 2000s when concerns start surfacing about transparency, particularly regarding the development margin and the exact mechanics of capital allocation. Because what happens, and we realize only now with the benefit of hindsight, that there was a fee that was being paid over that was not being disclosed to shareholders. A shareholder circular back in 2022 on MAS's corporate structure amidst key DJV contractual details. These later surface in a recent SENS announcement, and this has really fueled these accusations of piecemeal or delayed disclosure. And so there's been a breakdown of trust, I think, because of that. And why these minority shareholders have started to refer to this as a creeping coup or creeping acquisition. Because also what happened is the MOI, the Memorandum of Incorporation of MAS, is in Malta. And in Malta, even though it is listed here as well, its primary domicile is in Malta, and so it doesn't enjoy the same shareholder protections, or minorities certainly don't enjoy the same shareholder protections as they would if they were listed on the JSE. And just one more point quickly around conflicts of interest. This is the same Prime Kapital whose partner, Andrew Bird, is married to MAS's former CFO, Nadine Bird, the person who helped structure one of the earlier deals and transactions that were announced to the market this year before PKI then sweetened its offer. So there are lots of questions that are circulating around independence in particular, and why I think we've seen now the EGM requisitioned by these minority shareholders.
Micahel Avery, really appreciate that. Thank you very much indeed. Financial journalist with Business Day.
The Money Show.
The markets.
Sia Mbata's investment analyst at the Old Mutual Investment Group. Sia, good evening. Quite an interesting deal that Sibanye-Stillwater has done now, investing in the US.
Good evening, Stephen. Yes, quite interesting. So they've acquired a US precious metals recycler called Metalex, and the deal's roughly worth about $82 million within cash. And it's based in Greenville, North Carolina. So the quite interesting part about the deal is that although it's relatively small, it's part of a continuation of the company's move into recycling, with possibly some synergies with its Stillwater recycling operations. And another angle, Ian, my colleague mentioned, who covers the company, mentioned that one possible angle is that it could be interesting if tariffs are introduced on precious metals going into the US and therefore making exports from South Africa a lot more expensive, that it would actually position Sibanye as a key manufacturer within that region.
And then we've got more sanctions from the EU on Russian oil. Not sure how much of an impact it's going to have. I mean, oil markets have been pretty stable.
Right. So we haven't seen much movement from the announcement of sanctions, and really this is the 18th package from the European Union. And additionally, they're now targeting an Indian company called Nayara Energy. So they are an exporter of refined oil products from Russian crude. One of their key shareholders is also a Russian, so that was also quite interesting. And this is all in a bid to crack down on Russia and their involvement with the conflict within Ukraine. Although Russia represents about 10% of global production, we haven't seen much movement. And I think what we've learned from the last wave of sanctions is that actually oil finds a way. So within the last wave, we saw that Russian crude actually went to India and China, and the sanctions were pretty minimal. Had a pretty minimal impact. So, I guess just another wave of sanctions.
Sia Mbata, thanks so much. Investment analyst at the Old Mutual Investment Group. Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Just gone 6:45. Well, this story is developing in a strange way. So as we came to air, there was a statement from the presidency saying, and this was the headline, President Ramaphosa appoints new minister and deputy minister of higher education and training, and then went on to spell out that Buti Manamela is the new minister of higher education and training. No mention of Nobukhle Nkabane, who, well, one had to sort of read between the lines. Now, in the last few moments, a new statement, an updated statement from the presidency. It says this is the heading. President Ramaphosa removes Dr. Nkabane and appoints new Minister and Deputy Minister of Higher Education and Training. The first sentence, President Cyril Ramaphosa has removed Dr. Nkabane Nkabane from the role of Minister and Higher Education and Training. There's a lot going on here. Donovan Williams is a social commentator and analyst. Donovan, good evening. I've seen the presidency release statements about reshuffles and removals before. I don't think I've ever seen them announcing, well, here's the new person, and then a few moments later, another statement saying, well, actually, yes, we did remove them.
Yeah, it is quite interesting. And I think it was mainly prompted by the release of a statement by the ministry as headed by the previous minister, I think like I'm in a Monty Python sketch, by the previous minister thanking the president for serving without necessarily saying they are removed or they have resigned. And the interpretation by that was that she had resigned and not the president had removed her. So the latest statement by the president is to confirm that she was actually removed, because the interpretation was that her statement meant that she had resigned. It's kind of like this, in a way, if I could use this football analogy on transfers. And the team I support in England for all my, bad doing is Manchester United. And generally speaking, how they go through transfers is that they take quite a long time. In the end, they pay the club what the club had asked for initially. And you always wonder as a fan that why didn't you do that in the first place? Why did you go back and forth? And with the president on this matter, it seems like he should have moved very quickly when he had asked her to explain and did not condone her behavior in the portfolio committee. He should have moved it without the prompting. Because what it looks like now, it was prompted by his opposition parties, the EFF, the DA, and so forth, as well as the South African Students' Congress, and etc. So I don't think the president has helped himself, but at the same time, it's an outcome that I think is good, but he's putting himself in a situation where he's damned if he does or damned if he doesn't. Sure. And he shouldn't do that. So, the assertiveness South Africans want, they don't feel it even when he asserts himself. That's essentially what I'm saying.
That's such an interesting point. So how important was this to all of this, and it may be impossible to know, how important was the DA threat to vote against the higher education budget if she was still the minister? And that would have put the entire budget process in danger and perhaps brought about the end of the coalition. Now, I'm sure the DA is going to say, look, what we did, we're very clever, etc. I'm sure the ANC is going to say, no, it was something else. How important was that?
Look, we would, as you started, we would never really know, except I would say this. Our politics are in trouble, Stephen. Or parliamentary or party politics are in trouble. If it's horse trading to that extent, where a matter that doesn't necessarily face the country in terms of the budget, you are saying, we will not vote if you don't remove X minister or so forth. If we get to that point, and I think all the parties must start to realize that South Africa's party politics is in trouble. No single party got over 50%. No single party can claim that they have the actual real critical mass or majority of South Africans. Voting has consistently, decreased very, very consistently and sharply, even for that matter. So we have to, I think political leaders, and this is not about government of national unity and so forth, must say to themselves, are we making our politics like a bazaar where you shop for the best price and have very little with what we require as a country? So that must bother us. And that must bother the president as well as the leadership of the Democratic Alliance or whoever else who thinks that you should be bartering in this way. It's craft, and it's not required when you look at what we require, what we need in the country.
Donovan Williams, really appreciate the time tonight at short notice. Thank you. Social commentator and analyst. Well, now the presidency confirming that the president removed the higher education minister.
WhatsApp Stephen
on 072
702
1702.
Confirmation this morning from Sibanye-Stillwater. It's spending just under R1.5 billion. It's buying the American firm Metallics Refining. It produces gold, platinum group metals and silver from industrial waste streams in North Carolina. Peter Major is Director of Mining at Modern Corporate Solutions. Peter, good evening. Basically, Sibanye gets more access to gold, silver and PGM production. It's also happening in the US where it's protected from tariffs. On paper, this would look like a good deal.
It does look like a good deal. I'm not sure if the price is a great deal or not, because that's the single biggest determinant of return on investment. We don't need Warren Buffett to tell us that, but that's what he always says. The price you enter in is the single most important consideration. But at least they're buying something that is very similar to something they already have. They've already got a big PGM recycling business, so there will be synergies there. It's easy to see those synergies. They don't have to use smoke and mirrors to justify it. It's not like they're buying a different commodity in a different country that they've never had presence or experience in. And I don't know how much of this is paid in cash or shares, because it's still a chunk of money. It says it's paid in cash, but when your share price has gone up threefold in the last 6 months, it's not hard to raise that kind of cash. So I'd say this isn't a bad deal for Sibanye on what I've seen. Compared to the other deals they've been making the last few years, I think this is a decent deal, Steve.
I mean, it's fascinating to watch this play out. So Sibanye produces platinum. Platinum is exempt from US tariffs. Is it now in a really strong position no matter kind of what happens? It's someone's playing very, very good Trump chess here.
Yeah, I think they would have bought it under the current. I think they would have bought it without all this tariff hassle, to be honest. Neil was quite forthright when they bought Still a few years ago. We have to diversify out of South Africa. And we know we have to pay more than we pay for assets in South Africa. But we think it's worth the trouble, the risk, the expense, so that shareholders have a very international company that's much more impervious to the machinations of South African politics and legislation, etc. So I think, like I said, this is more in line with their traditional work. And yeah, it's on the far end of the PGMs. It's after they've dug them out of the ground, refined them, sold them, they got used up, and then they get to recycle them again. And the fact that they got the PGM metal prices, all of them turning now and going in their favor for the last few months, it's really given a great supercharge to the share, to the company.
Peter Major, thank you so much, Director of Mining at Modern Corporate Solutions. Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024.
Well, you've heard over the last few months a little bit of a debate around whether government should still encourage or even financially incentivize smelters to operate when they use so much electricity. I suppose this takes you to an argument about industrial policy, whether we should still be producing certain products here. If you don't, you're deindustrializing. And of course, there is this strong argument that you should be beneficiating our minerals here rather than, selling them as sort of raw ore to China. Japie Fullard is the CEO of Glencore Ferroalloys. Japie, good evening. Thanks for your time. You're in an interesting position. You actually produce chrome with Marafe Resources. You had to suspend production of some of your smelters. Electricity prices are very high. I'm sure you would agree with me they're going to go higher still. Is there still an economic case for chrome smelters in South Africa?
Yeah, good evening, Stephen. And first of all, thank you also for the opportunity to also put our viewpoint forward. Would it be okay, perhaps, if I could just quickly highlight Glencore, especially our footprint in South Africa? As you know, we've got Glencore Ferroalloys, where we've got massive beneficiation operations. We've got crow mines, underground crow mines. So that means that we are integrated. So we mine the ore and then we also beneficiate the ore. Then we also have got Astron Energy, as you know, and then also Glencore Coal. So, I mean, from that perspective, Glencore is actually quite a big player in South Africa in terms of using electricity,
Sure.
but also supplying coal to be able to actually produce electricity. So we are in a very fortunate position. But coming back to your question, just in terms of beneficiating ore into ferrochrome, so that means you take the value of the ore and you upgrade it, and by doing that, you are adding a huge amount of value. And if you just think about all the positive spin-offs, I mean, obviously, we are very electricity intensive, and this is where the challenge comes in, is that, during load shedding, we as the energy intensive users are being asked, let's say, to pull back some of our operations, which we are doing and did do so in the past quite successfully. But unfortunately, I mean, if you have a look at what happened since 2007, electricity prices went up by more than 800%,
Sure.
and where the GDP only went up by 103. So you can see that there's a massive disconnect. And for that reason, if you compare us versus China, they are more than 50% cheaper than us on electricity, and electricity being a very important cost factor in our
Sure.
operations.
I mean, that probably almost makes it unbeatable, unfortunately. The other big risk to you, the regulatory environment. I mean, regulations can change quite quickly. Cabinet, I think 2 months ago, said they supported an export tax on chrome, for example. I mean, I wasn't expecting that. You might have been. Is the regulatory environment, does that make it tough for you?
Yeah, I mean, of course. I think just to come back again, South Africa sits between 70 and 80% of the chrome ore in the world is placed in South Africa. So obviously we as South Africans have got, first of all, the right and then secondly, the opportunity to actually create the value. And due to policy, it makes it quite difficult because, I mean, obviously the ore tax, we knew about this coming forward a while ago. But it's important to understand that it's not a single solution that is going to help us to really beneficiate in South Africa. I'm not sure if you know about the cabinet statement that was released on the 26th of June. And in here, they specifically refer to a cheaper electricity tariff for the energy-intensive users. So if we can get that, obviously we will then be more competitive. So that's the first focus. The first focus should be to have cheaper electricity, and that is a government policy that need to change. And if they can do that,
Sure.
obviously we will be then competitive.
Okay.
And then obviously there's
So Yapi, sorry, we've got 30 seconds left. There's a trade-off here. So government on the one side, if they give you cheaper electricity, if they change the policy in that regard, okay, it'll involve Eskom, but that probably means that everybody else has to pay a little bit more. Now, explain to me why it would be worth that. What I'm really asking you is to paint the picture for me of South Africa without ferrochrome smelters.
Yeah, Stephen, I think that is the perfect question. If you have a look at what we are contributing towards Eskom's revenue, we're talking about on the ferrochrome side between 15 and 20 billion rand per year. If we close down all the smelters, I mean, I just want to say that we don't have one smelter currently running. So that means Eskom doesn't get that electron sales. So either you get 15 billion, which they are getting now, versus zero. So South Africa somebody is going to pick it up anyway. So it's actually more beneficial to actually use more electrons so that they can have a constant revenue, and by having that work around alternatives. I'm not sure if that makes sense.
Sure, it does. Yapi Fullard, thanks very much indeed. CEO for Glencore Ferro Alloys. Just bringing the time to just after 7 o'clock. Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024. Good evening. Welcome to the second hour. I'm Stephen Grootes. Well, already quite a sort of busy Money Show, really. The presidency statement kicking us off, saying that there was a new Minister of Higher Education. No clarification about what had happened to Mbali Nhlapo. Then, about half an hour later, clarification from the presidency saying he had removed her. You heard Donovan Williams explaining earlier that in his view, it seems that Mbali Nhlapo may have caused that by simply announcing that she was leaving, not even really formally resigning. I suspect, though, that lots of people are going to see this in lots of different ways over the next little while, and it is going to all get a little bit messy. My first thought, of course, is that it should mean that there won't be any drama with the budget and the appropriations process in Parliament later this week. Hard to know for sure. This is South African politics we're talking about. But I would like to think that this will now go through. And I say that because having the budget stop now would lead us down a very, very difficult path, one way or another, whatever were to happen. We'll talk councils and municipalities in just a moment. Trevor Manuel's been talking a little bit about them. And then, of course, we'll be looking at a book review. We'll be talking about companies that actually do change things. And then, don't forget, Mbali Nhlapo, someone who's made a lot of money, well, I think done well for herself, out of becoming a housekeeper and cleaning influencer. Did you know that in the last quarter of last year, the number of domestic workers employed in South Africa was still 16% lower than it was before the pandemic? Something happened in the pandemic to domestic work in this country. And think of how many people depend on it, how many families depend on it, and what's happened to them. So one of the questions I'll put to Mbali when she comes in about 20 minutes' time is if she's seen any less demand during that time. Extraordinary things going on. Good to hear from you tonight as well. You may well have a view on the former Higher Education Minister, or the new one, Buti Manamela, on 011 883 0702 021 446 0567, and voice notes tonight on 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, you probably know that many people feel, well, a bit frustrated about their municipalities at the moment. In most parts of the country, I think there's actually a growing sense of anger in Joburg. News 24 has been reporting how the ANC's chief whip in Joburg, Sitembiso Zungu, has been accused of running basically a construction mafia. He denies interfering with the school project. It does seem that he was actually sentenced to 2 months in prison for his involvement in that. Again, he denies that. Meanwhile, and this was very interesting, last week, the chair of Old Mutual, Trevor Manuel, yes, the former finance minister, he made a series of comments about councils in general and Joburg in particular.
If we look at what's happening in local government across the country, and for the bulk of my time, I live in Johannesburg, and you can't think of a worse local authority than Johannesburg. How many days without water? How many days without electricity? How many roads without potholes? How many roads where sewage does not flow down the streets because of neglect? Because tenders are more important than the people.
Trevor Manuel speaking last week at the funeral service of a former mayor, Teresa Solomon. She was, of course, a former mayor of Cape Town, did play other roles during the struggle and after 1994 as well. Ditiro Rantluane is engagement manager at Ntiso Revenue Consulting. Ditiro, good evening. I think Trevor Manuel may have been speaking for many Joburg residents when he said that, and maybe for a lot more people when he spoke about the sense that money is just being stolen or eaten or disappears somehow. Is that feeling really backed up by evidence in many councils around the country?
Good evening, Stephen, and thank you so much for having me. Unfortunately, yes, that is the same message that's reverberating throughout the different municipalities as well, right? I mean, if you look at even the white paper that we are busy reviewing now, the very, very first critical issue that needs to be reviewed is basically municipal fiscal and financial reform. It's basically ensuring that the funds that are coming into municipalities are actually properly allocated. I mean, even our honorable president, he actually mentioned that in his Sona speech, saying that across the country roads are not maintained, water, electricity supplies are often disrupted. I mean, it's basically the basic services that a lot of a mere person like you and me are sometimes being disgruntled about, because this is what we are experiencing on a daily basis. So there is the element of frustration and anger. There is the idea of mismanagement of funds that's happening. As I said, it's actually number one of the 9 critical issues to be reviewed by the white paper for local government.
I don't even have to make the obvious point about Joburg that I live in Joburg, like Trevor Manuel, perhaps like yourself, I don't know. And there's a budget of 83 billion rand, and I can't see where the money goes. I just can't. But there's another great example of how this particular council has dealt with money. Several years ago, they voted in favor of having a surcharge. Basically, if you buy prepaid electricity, you needed to pay a network fee, right? They eventually implemented that at 200 rand a month. And now, suddenly, they've decided, because they went through a period of having decided to implement it, but not actually doing it, now they're clawing back the money from people. I mean, this is kind of almost tailor-made to frustrate you.
I mean, that's essentially sometimes what the people on the ground are actually constantly feeling, that there is constantly more and more money that's being taken out of our pockets, and it really comes back to really reviewing how money is actually being managed. And it talks about even transparency, right, and accountability. And actually ensuring that with municipalities there's adequate public participation that's happening. People who are residents need to know what's happening. What is the strategy that the municipality is imposing? If the municipality is in distress financially, let it be known. Let it be known. Let it be discussions. Let there be imbizo, so that people are aware why there is a surcharge that is being imposed. Not just it being given to you or force-fed to you, but there has to be reasons behind it. And people somehow, I believe it or not, once you sit down and you actually explain the whole context, in most cases they do understand that, okay, fine, we understand where you're from, what you're about, what the accountability is, and the transparency. Then we can actually then agree to the surcharge if we see it fit. It's all about transparency. It's all about getting public participation involved. And when you say transparency, we've been talking about financial management, right? We will then know how the money is being spent. It is spent to the development of what was meant to be allocated to, and that is very key. And that's why a lot of people are actually very frustrated at the moment, because it's like a dark curtain, and all you get is just all of these surcharges coming in, but then there isn't a bit of transparency where me and you are quite clear and fair to what's happening and where we are going as a municipality.
Is the white paper going to fix any of this, Tiro? I kind of want to just lie under the table while we take a minute and think about it.
Even our president, mentioned that it's all good and well on paper, right? However, when it comes to execution, it's a different story. I mean, the white paper itself really touches on all the core principles that needs to be achieved. I mean, if you look at the vision as well, it is really something to look forward to, and ensuring that having every municipality really adhere to that vision will definitely change how South Africa is. However, it is not a silver bullet, right? It has multiple levers that need to be pulled, and for that, it really needs all people to really put their shoulder to the boulder and move this boulder upwards. I mean, as I said, we're talking about, there's also the issue of cadre deployment, where people who are not necessarily qualified in their roles are in there, So it's all about ensuring all of these and ensuring that planning is better. I mean, based on the white paper, in the past 5 years, right, 18 billion was returned to Treasury. 18 billion, and yet we have so many municipalities that are in distress. So what does that tell you, Stephen? It tells you that there's poor planning and poor execution in some of the areas, And what does that mean? It means that maybe bring in other people who can actually come in and actually execute on what needs to be executed. Because every rand returned to Treasury is basically families that are not going to be impacted positively.
There's an interesting thing that's been happening in Joburg, and there's been a lot of commentary about it, and maybe it's just a comment on the WhatsApp groups I belong to, Ditiro, about these public spaces like Marks Park, right? That the city, all the Joburg Property Company says it wants to do is kind of reassess whether they're being used effectively. What so many residents in Joburg think is happening is that, no, the city's going to take this over, try and make more money from it, and effectively steal the commons from us, steal, common areas from us. Now, I don't know which version is true. What I'm getting to is that the citizens are showing, or many of them, a complete lack of trust in the people who are running Joburg. That's what I see from this, is that they don't trust Joburg. They don't trust the council. Now, I'm reminded that in eThekwini last year, some people came very close to refusing to pay their rates, and I wonder how close we are to something like that.
Well, I'm not necessarily going to speak for one specific municipality, Stephen, right? I mean, what we do, because we are involved in multiple local municipalities, we kind of do see some similar trends or similar pain points that are being experienced, And there is definitely an increased non-payment culture that's happening, right? And majority of it is because we're not getting the basics right. People are not getting the statements on time, or people are not being billed as accurately. I know that there's a lot of estimates that are being done in a lot of municipalities as well. Why? Because some of the things like meter reading is not being done as effective as it's supposed to be, So those are small things that one can actually start looking into as another strategic lever. And I keep on emphasizing the transparency. When you're transparent, then you actually ensure that public participation is there. People really then understand what's going on. It's like the board. You constantly have to ensure that your shareholders know what's happening. If there's an iceberg ahead, you need to tell them in time that, listen, there's a potential turmoil coming, so that's the reason why we might actually have a specific surcharge. So yes, there's definitely a huge non-payment culture. I mean, as we speak now, I think there's about 348 billion that is being owed to municipalities by residents.
Sure.
Especially when you're talking about electricity there. Now, when you actually touch base on some of these, majority of them are saying, well, I'm being billed, but I don't trust what I'm being billed. So that's why I keep on saying that transparency and public participation is very important. But talking about it as well, financial mismanagement needs to be really curbed. People need to be accountable, and then people need to make sure that the right decision makers with qualifications that can really catapult the municipality to the next level are they. You need people with vision.
Ditiro, thanks so much. Really appreciate the time. Ditiro Rantloane is engagement manager at Intiso Revenue Consulting. So much going on in the local government space, so much not going on in the local government space at the moment. Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
The Money Show.
Business Books.
Well, Ian Mann, Managing Director of Gateways Business Consultants, he's been looking at the book Distinguishes by Professor Sandra van der Merwe. Ian, good evening. Van der Merwe, I think, quite a long track record in South Africa in marketing all sorts of things.
All sorts of things.
What distinguishes?
Distinguishes is an unusual book. What she does, it's almost an encyclopedia of where the world is moving to, but she analyzes what she's seeing and she breaks up into four stages. And the beauty of this is that you can actually understand where it's all going to, and you get a sense of where you should be positioning yourself and how you should be looking at your company and what more they can actually do. The book covers about 100 different companies and examples from all of them, local, international, everywhere. So it's a fascinating read. Reads very easily, and the it's not just an agglomeration of a lot of ideas. She's got a model that comes right through this. She says that there are 4 stages in change that goes on. First stage is to shake up and disrupt the status quo. The second stage is to frame an emerging future so it's different to what's now, and then you're going to build into that future. The third one is anything you do at speed because the guys are coming after you. And the last one is scale it up. So what she's done, she's taken examples from all over to show how all this can work. Now, I think what's most useful is that it actually is practical. If somebody said, well, you must shake up your industry, you say, well, a great idea. What does that actually mean? And I think that she's shown examples of 4 different types of shake-up. I'll just give you a couple. One of them is the logical triggers. There are things which are happening around you which are logically not okay. And when you look at it, you say logically, we have far too many accidents in this country. And because we have far too many accidents, it costs insurance companies a great deal of money. Logically, there must be a better way to do it. And then you get people like Discovery saying, okay, I'll tell you what, we'll give you all sorts of benefits if you drive properly. So we'll monitor how you drive, how you brake, all sorts of things. And if you're good at that, you're going to benefit from it. So I've now got an incentive to actually try to be a better driver. That would be a logical trigger for something else. You also get emotional triggers. So what happens is you might find that you've got you're involved in something and it's emotional, and you see music and you want to enjoy it more, but you can't. So you have to have something or other that's going to allow you to enjoy that sort of thing. The ethical triggers. An ethical trigger could be, we've got to try and make money more available to people. So if you took something like M-Pesa, which is a way of sharing money with people who don't have bank accounts, you've got all those sorts of ways to say there's got to be a better way of doing it. And the people who've come up and started to do new things are the ones that make a difference. She tells a cute little story about Zuckerberg at a very early point of trying to build Facebook. And one of the you can imagine suited investor says to him, have you got any examples of anybody who's created a global social network and made any money out of it? And he said, no, but that's exactly the point.
Sure.
And I think that the key is to try and find something that nobody else has done so you can start doing something that really makes a difference. So when you look at trying to shake up an industry, one of the most obvious examples of an industry that's shaking up, as opposed to selling stuff, we're selling services. So you wouldn't buy a car, you'd buy the service of a car.
Yeah.
And
so it's going from buying your IBM computer to buying services from IBM.
Yes. Now, the lovely part about that is IBM would retain the computer themselves. They still have it on their balance sheet. And all they have to do is they have to see to it that it works all the time. Because if it stops working, you'll cancel your contract or give it back. Or you should be giving it back and they'll repair it for you quickly so that you can continue using it. So the challenge is not, yes, there are people in South Africa who might put solar panels on your roof. But there's a company in the United States called Sunrun. What they do is they will rent you the solar, which is terrific. Except that all you want from solar panels is electricity. So what you do is you don't rent the panels, you pay only for electricity that you use. And there's a mind shift, because as opposed to saying, well, you've rented the car and now you just have to have it. So you've rented the car from us, and it's our job to see to it that you can continue to doing what you paid money for, which is to drive the car. So you might only pay for the amount of kilometers that you drive. But it's turning as much as you possibly can into a service which we've never had before. And I think that's a game changer.
So, I mean, when we talk about distinguishers, what we're really talking about are companies that actually change the world.
Absolutely. And it really is that. To the extent that you're talking about changing behavior. You don't want to simply create new stuff which will enhance people's behavior. But what you are trying to do is you want to literally change their behavior to reflect what the new demands would be. You want to improve the products or services so you find better ways of doing what they can do. So you're trying to really shape things completely differently. And I think that the instead of using technology to enhance your ability to produce more products more cheaply, you use technology to see that the customer's experience is much more wholesome, and therefore they're more likely to use your product more. So these are not ideas. You can actually read this lovely book with hundreds, literally, I think it's about 100 different companies that they talk about, but that she talks about. All of these companies are examples of what you can do. I think this book is particularly valuable to people in business only because it'll stimulate your thinking. And I think that what happens very often is we hear more of the same. And when you hear stuff which is out of the box, that's nice. And especially if there's something already in the box, so you can say, they did this, so let's do something else. And if somebody's done something, you can always have an add-on.
Yeah.
So if you think that you can turn a car into an asset, which now becomes something you can use, but if you can't afford the asset, maybe you could just rent the asset. So there's now a company that rents Ubers, and as opposed to wondering whether the guy's actually going to give you your money back, as he clocks the fare that he has, a portion of that fare goes directly to the person he's rented the car from. There's a company that's set up in South Africa, and I think they're also in Brazil. And you're finding clever ways of getting much, much more out of the satisfaction that the customer will get from using your product.
It's a really interesting study. I mean, there are a lot of companies to look through. She must have done a ton of research.
She has. I mean, they're South African, they're international, they're all sorts, and they come from all different areas of business. So you've really got a lot of things to get your mind around and a lot of stimulus. It's one of those books that really should be read by all business people because it's so stimulating. It'll give you some wonderful ideas that you can think of. And behind all of that is this 4-part model that you're trying to change things and you're trying to move into something which is quite different. You really do want to shake up what's happening and disrupt. The opposite of a distinguisher is an extinguisher. If you keep doing what you've always done, you won't get what you've always had.
Something to read then while you wait for your Sapphire flight. Ian Mann, thank you. Our regular book reviewer, MD at Gateways Business Consultants. The book is called Distinguishers. It's by Professor Sandra van der Merwe. It's just gone 7:30. Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? All those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
The Money Show. How I make my money.
Well, there are lots of different ways to make money in South Africa, as you know. Mbali Nhlapo has done something that many people sort of run away from. I think most of us run away from cleaning in dirt. She's run towards it. She's described, I don't know, Mbali, how you feel about this, as a housekeeper and cleaning influencer. Yes. Do you prefer something else?
No, I prefer that. I prefer to be called a housekeeper. I prefer to be called a housekeeper, actually. That's what I love.
Well, good evening. Thank you so much for joining us. And in case you're wondering how she feels about her work, here's a little taste of some of what Mbali's done over the years.
My name is Mbali Nhlapo, and I'm a housekeeper. DIY of keeping all your glasses nice and clean. 1 cup of warm water, 1 cup of vinegar cleans your glass coffee table like it's running out of fashion. Also cleans your TV, your computer, your laptop screen. Oh, nice! How amazing is this? Do note that we do not do the round in shape, however, do the aspect in shape. And your glasses will be nice and clean like this. My name is Mbali Nhlapo, and I'm the housekeeper.
Mbali, you're pretty much like that in person, right? I made the point that most of us run away from dirt.
Yes.
You run towards it.
And I love it.
What do you see that we don't?
I see a clean space, a fresh mind. When I can't even explain it the way I love it. I see a fresh mind when your space or your place or your home is clean. Your mind is always sharp. Actually, a clean house is a happy home. A clutterless house is a peaceful home.
You don't think, some people will say, no, I've got young children and dogs and things, and I quite like the mess. You don't like that at all?
No, I don't.
So, I was thinking a little bit about what could make it so, because it's rewarding for you, right?
Yes.
And I was thinking, often you can be at work as part of a team and you don't know what your contribution is. You can spend a lot of time and energy with your children and you don't know if that's going to work out. Yes. But when you clean, you can see
the results.
The result. Is that part of it, do you think?
Yes. You can see the results, and you know what's satisfying is when you get into a room, the walls are dirty. When you finish there, they're so nice and clean. That is satisfying. When the laundry is dirty, when you finish, it smells fresh. That is so satisfying. Shoes, especially sneakers. I can go on and on because a clean house is a happy home.
How did it start for you? I mean, how did you end up doing this?
I end up doing this because it started when I was retrenched, actually. I was working at a furniture shop. Then I was retrenched sharp. I sat at home about 3 weeks. My sister-in-law called me to say that, Mbali, I've made arrangement with another lady. She did not come. I'm still waiting at the appointment station. I said, okay, hold on. I called everyone at church, all around. And one lady said, I'm going to do it. I said, Mama, you know, that was 2015. You know that you're going to work there, sleep in and doing that. She said, I'm going to do it. Even today, she's still working there. After 3 weeks or so, everyone was calling me now. Mbali, can I have a cleaning lady? Mbali, can you come and clean for me? And my neighbor said, I need to clean for her. She said, okay. Everyone was now calling me. I said, okay, so this is Mbali, hlanganisa Mbali this. And yet, I know how to clean. I know the DIYs. So it was just a combination.
How did you find people to actually fill the jobs? I mean, was it church networks? Was it something else?
It was before it was church networks. Before it was church networks, now there are people that are applying to be housekeepers. Before it was simply church networks, and then now every CV you get applications.
I mean, are there some people who you don't pass, who you don't accept?
Yes. Not everyone can be a housekeeper. Not everyone can be.
So when you're cleaning, you're running a business, you're doing some of the cleaning yourself, you film yourself doing this. Are you still sort of getting a sense of satisfaction when you go to bed every night? Not just because of the work of getting other people work, but because of actually the cleaning that you're doing yourself?
Every time. I get satisfied each and every time, especially when I go to train housekeepers. I get so satisfied to think that housekeeper has saved her job. She's going to be a proper housekeeper, not a perfect one, but a getting to detail one. I feel happy.
What kind of training do you do? What does it take?
I train housekeepers. I train someone that wants to become a cleaning expert, someone that loves to clean, someone that is working as a housekeeper currently. It actually takes for them to know what to do, what to use, how to use it, so that you save time.
I mean, that saving time is a big thing. You can get a lot done if you know exactly what you're doing.
Exactly. And knowing what to use correctly, you're actually saving a lot of time.
When you are helping people into employment, sometimes I wonder if South African bosses are maybe not very nice. Have you come across that?
A lot. People are not the same. Same applies with workers like your housekeepers. They're not the same. I normally say that I will train a housekeeper to be a thorough one, but I can't train a bad attitude. So people are not the same. If you've got bad attitude, there's nothing that I can do about it. If you're willing, I can definitely work with you.
And some bosses, people who want housekeepers, I mean, have you ever had to say, well, actually, I've dealt with you before, I'm not going to help you again?
No.
Really?
I haven't gotten to that point.
Well, let's hope it doesn't happen. The experience of helping people into work, that must be very empowering because people are desperate. I mean, people are desperate everywhere.
Yes, it must be. It's actually so good. It feels so good, especially when you help someone to find work, to be at work, and they last at that work, and they make their bosses happy. Actually, it's two-way. The homeowners are happy. The sister is happy. We call them sisters.
Yeah.
The sisters is happy, then you are good. You're good. People are looking for employment.
Do you employ any men?
Yes, I do.
Do you notice any differences about how it works out?
Yes, I've noticed. You know what? Brothers, I'm not sure it's because of where they're coming. They know that if you don't have 10 rand, you don't have 10 rand. Brothers are hardworking. They don't come with stories to say that tomorrow I'm taking a child to school or I'm sick or what. They're hardworking.
Sure. I mean, I'm always told that it's men who are the ones who are lazy.
No, actually, men who loves to clean.
And ages? I mean, do you find a difference? Because, I mean, sometimes older people look at younger people and say they don't want to work. You know, I mean, that's what older people have always said through the ages.
And that is true.
Wow.
Sometimes, actually, the age is, it's tricky. How so? You find a lady that is 55 years old.
Yeah.
They want to mother you.
Yeah.
At your home. You find a 36 or 27 or 30-year lady, they don't want to work. Actually, they are not getting the house working. Yes. How is the being a housekeeper or the cleaning business? So it differs.
And living life experience matters, I think. You know, if you're working in a house that's got young children and you don't know what young children are, you know, that's a whole new level of stuff.
That's the whole new level. And also you're getting a younger lady that will be willing to, as young as she is, she's willing to know, she's willing to learn, she wants to grow as a housekeeper.
So something happened during COVID-19, right? Yes. And I went to go and look up the numbers earlier today. Yeah. And in the last quarter of last year, Stats SA did a survey about domestic workers. And they found that the number of people working as domestic workers was 16% lower than it was in 2019. So in other words, something like 16% of the people who were working as domestic workers in 2019 are not working as domestic workers now. And that scares me, because that's a large number of people who are usually the only person who's working in the family, bringing money in. Do you still see strong demand? How's demand for your services? People phoning you, how's that changed over the years?
It has changed a lot since from COVID until now. I do agree. Usually we would have domestic workers that will go on leave December time. We used to be so busy December time, Easter time, because of most of the domestic workers are now going on leave, and us, the sisters at work, will come and stand in. So now, since COVID, they are no longer going on leave. They take weekends off instead of the whole December. So maybe it's because of money. Instead of the Easters, they can take weekend off, not the whole month. So the demand has changed.
People must be finding it tougher.
Yes.
I think everybody seems to be finding it tougher. That must be very tricky.
Yes, it is actually has changed a lot compared to what we know, to say that December you'll hire temps. Actually, we'd start October to train the housekeepers temp, because we know that December will be so busy. Now it's no longer the same.
Sure. Do you expect... having domestic workers it's not something you see in most parts of the world.
Yes.
You do see it in Southern Africa, and it's very entrenched in our society. I mean, it's something that maybe hasn't changed much at all since 1994. There's a Labour Relations Act, there's compensation, there's even a union that I think hasn't done very well. But it's really hardly changed. Do you think it's ever going to change? Do you think we're always going to have this? I mean, sometimes I think we need it because of the employment it provides.
Yes.
But it is a kind of almost uniquely South African thing.
It will change. It will change. Now, before, we used to think that domestic workers are just domestic workers.
Yeah.
Now, the domestic workers industry is actually a profession. So we need to take it professionally, register them for UIF, for pension fund and all that. It will change.
It's very interesting to sort of work it all out. Do you ever feel a sense of stress that people rely on you for their jobs? And when I speak to people who run businesses, you know, I think that moment where they're responsible for someone else's salary, that must be very scary.
You do feel stressed. I would feel stressed. I would feel stressed because if I don't get clients coming in, there's 15 people or 30 people that are not working. So I need to make it a point that they keep on working. Remember, it's not only them, it's their kids, their family that are looking upon them. So they are looking upon me and their kids are looking upon them. So yes, you do feel stressed.
We're speaking to Mbali Nhlapo this evening, housekeeper and cleaning influencer. She's with us through until 8 o'clock on The Money Show. Over the years, you've heard me ask wealth manager Warren Ingram the big questions. How do we invest wisely? How do we protect our family's future? all those conversations, that entire library of financial expertise is now available as a podcast. Straightforward advice to help you build your wealth on demand. Just search for Warren Ingram's Personal Finance wherever you get your podcasts.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024.
The Money Show. How I make my money.
Mbali Nhlapo, the housekeeper and cleaning influencer, with us on The Money Show this evening. All right, Mbali, I have a few questions I have to ask about the actual nitty-gritty. Yes. The worst job you've ever had to do, where you've opened or you've got to the property and smelt the air or whatever it is. Are you able to tell us?
Yes, I'll tell you. The worst job that I've ever done is the hoarder home.
Oh, yeah?
Someone that is a hoarder. Actually, when you get there, the cockroaches are just all over. Cobwebs are just all over. And the smell of rats, urine, before you even see it, the smell is there. You'll go there, put on your mask, your gloves, and you need to get to work. You are called to do that.
Sure.
You are called to do that, and you need to do it.
Do you wear a protective suit when you do a job like that?
Yes. And I make it a point that when I get at home, by the front door, I need to take out my shirt, my trouser before I get inside, because you never know. Maybe you might have some cockroaches or what.
Are there many jobs like that? Things happen. People maybe pass away and now their children come, or the next door neighbor says, oh, something's happened here or whatever.
Yes.
So, there must be big jobs like that.
No, they are. There are big jobs like that. Sometimes maybe someone has passed away, the relatives are getting to that house and calling us to say that, please declutter, we need to sell the house, or we need someone to stay in the house. There's so many jobs like that.
And you go with a team when you do that?
Yes.
Do you have an A team and a B team?
Actually, I have the A team of that work. For that job, there's an A team that specifically deals with it.
I would think for the owner or the person asking you, they're just going to pay the money.
Yes.
They want to walk away.
They want to walk away. So they'll ask you how many hours. You tell them the hours, they'll come back afternoon.
Yeah.
Yes.
So there's money to be made. Are there particular jobs you have to charge a lot for? So a job like that would be a lot. Do you find that maybe there's a small business you end up having to charge more for than a private home? Are there particular homes where actually you can just tell from the person on the other end of the phone, this is going to be a big job?
No, you can't. You need to go and quote. You need to go and quote. For such, they'll tell you aspects as to say that there's this room that was not open for 10 years. There's these rooms, the windows were not open for 15 years. You need to go and quote.
Wow. Oh. So removing things like stains, right? What are the toughest stains? And I presume they're on particular material. So it must be tougher to get red wine out of this than it is out of that.
Okay. Removing stains is my happy place, actually.
I know.
Removing stains is my happy place, such as when you've got wine stain on a white T-shirt. It's not like when you have it on a carpet.
Yeah.
So on a white T-shirt, you'll use hydrogen peroxide, dishwashing liquid, and bicarbonate of soda. Right?
Dishwashing liquid.
Yes. Correct. Now, on a carpet stain, you need to mix hydrogen peroxide, salt, bicarbonate of soda, and a lemon.
Does it matter how long the stain's been there for?
Yes, it does. The longer the stain was there, the harder for the stain it's going to come out. You need to soak those products. Yes, it's still using the same products. As long as the wine stain is there, just soak it.
Is it ever impossible to get a stain out?
Ever impossible? No.
Really?
No.
You reckon?
No. It's not impossible. As long as you know what to use, it's not.
So if you can't get the stain out, you're the one making the mistake.
You are the one that's making the mistake or not using the correct detergent.
Sure. So can you make it look like new? Or do you think, a white shirt,
yes,
red wine, white shirt, you can make it look exactly how it was, where you won't be able to tell?
Not exactly how it was, because maybe let's say it's not new, but you can make it clean.
Yeah.
Like I'm always saying, it is not new, however clean.
When I was younger, you were never allowed to drink red wine because of the stain. Now people drink it all over the place.
Even the couches.
Yes.
The other time we were removing wine stain on a white couch.
Ay.
That took us 2 days.
2 days?
Yes.
You have to use a hairdryer or something
No.
at some point.
Why did it took us 2 days? The first day, we went and soaked the couch. The second day, we went and cleaned the couch.
Sheesh.
Yes.
Did red wine get easier to clean? Did we just get better at it?
No, it doesn't. It doesn't come out easier.
Yeah.
However, we need to use the correct ones and also soak it. Like I said, we went 2 days. First day was the soaking. Second day was the cleaning.
Sure. Do people get in touch? So you're a business that wouldn't exist without social media.
Yes. No, it would. It would.
It would.
Yeah.
But you'd be very different,
Yes.
I think.
It would.
Yeah. So I mean, it's interesting to look at the impact of social media for businesses.
A lot.
Because, I mean, and I keep using this example. Lisa Raleigh was talking to us a while ago. She runs health stores, so gyms. So she started by going to people's houses, right?
Yes.
And she always used this example, had to put leaflets under people's windscreens. So she'd go to a university or something or a hospital or whatever
Yes.
and just put all these leaflets. Now that leaflet is Instagram, it's whatever, it's
Yes.
TikTok.
Yes.
And making that work must be such a big part of your business.
Yes, it is. It is such a big part of the business. Before COVID, before the TikTok brainstorm, it used to be flyers, standing door to door or to the gate or to the robots. Now, we're no longer doing the flyers as much. We're now on social media.
You, and I met you half an hour ago, strike me as someone who is not scared to go in front of a video camera, to talk on the radio, things like that.
No, I'm not.
Would it have been much harder if you were?
Yes, it would have been much harder. If I was scared to do it, it was going to be harder.
Yeah.
Because I'm not scared to do it, it's actually easier.
So what I'm saying is that for a small business person, someone who wants to start a small business as you have, who's a bit shy, they can have a tough time, I think, nowadays.
Definitely, because nowadays you need to stand in front of the camera and do your thing. So if you're shy, you need to come out of the shyness.
Mbali, we've got 20 seconds left.
Yes.
You're very confident for the future? Lots of demand? Maybe pass it on to your family, get them involved as you do?
Yes, I am very confident to the future. As long as we have houses, then we have business.
And red wine.
And red wine and coffee stain.
Mbali Nhlapo, thank you very much. Really enjoyed talking to you tonight on The Money Show. How she makes her money, the housekeeper and cleaning influencer. Cleaning up the mess that we make.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Bank, proud sponsor of the African Blockchain Report 2024.
Well, U.S. markets looking up mostly today, particularly a lot of tech news coming up at record highs as they were for the JSE earlier. The Dow Jones up 0.5%, the Nasdaq up 0.75%, and the S&P 500 up 0.6% at the moment. Lots to come in the next 24 hours or so. We need to talk about changing payment systems on The Money Show this evening. Don't forget the developing story, of course, what the presidency has now confirmed as the removal, I think was the word, of the higher education minister. Good evening, it's 8 o'clock.